Hello and welcome. You're tuned into your budget headquarters, where we're getting you the special coverage for the budget. Next up, we spoke to Hiren Ved, who's the Director and Chief Investment Officer of Alchemy Capital Management, in conversation with ET Now's Ayesha Faridi. Let's go across and listen in to what he had to say about the budget.
Hello and welcome to ET Now, analysing and dissecting Budget 2025. The markets surely seem to have given their verdict, where you had the entire capex theme cool off and consumption really was the one which leapt up in trade. Overall, it was a bit of a tug of war that was playing out at an index level, so you're not going to see any excitement on the index. We closed in just about marginally soft. But let's try and dissect the tug of war, which was playing out pretty much throughout the day post the budget speech. Hiren Ved from Alchemy Capital joining in on the show right now to analyze exactly that. Hiren, hi, good to have you on ET Now. Looking dapper for a Saturday, I must say. Was it worth it?
Yeah, absolutely. Every penny of it, I would say.
Yeah, I can see trend, consumption, Phoenix Mills, all of it was climbing up. But tell me, for a market perspective, Hiren, other than, of course, more money in the hands of consumers, what's really been the big takeaway?
I think, Ayesha, if you really look at it, the perception was that consumption was slowing down in India. Credit growth was struggling. And that part of the economy really needed some upliftment. And I think that you needed to get the mood of the consumer up. And I think by giving this tax break, I believe that the government has achieved that. And mind you, they've achieved that fine balance along with preserving the fiscal deficit glide path and also giving equal importance to areas of the economy which need competitiveness, which is manufacturing, especially labor intensive. For the first time, they've talked about doing things for gig workers. There are some new thrust areas like nuclear energy. So I think all around, to me, it's a fairly good and a balanced budget.
Sure. But Hiren, for a market which is so brittle and fragile, such as ours right now, the fact that we've knocked off 10.5 to 11% from the 52-week peak on the Nifty alone, and even more so when it comes to the small cap index with a 14% knockoff. And, especially the narrative around now Trump 2.0, Monday morning, I don't think it'll be the budget, but the tariff talk, which is going to perhaps, dominate all of our screens and morning table conversations. How much can the budget really try and bring about buoyancy in the equity markets? Or do you think there's a clear disconnect? We are dictated by the global mood right now.
So I think, no, I think even the budget is significant. I think there was also, Ayesha, we forget that until yesterday, there was still a little bit of resident fear within investors that will they again tinker with the capital gains tax or the STT, right? None of that has come through, which is good news. Yes, I think finally, in the next 2-3 days, people will forget the budget and then we will be back to basics, as is always the case. But I think I wouldn't say that this budget is not significant. I think it has given a signal that it does care for the middle class, it does care for consumption. And for too long, there was a clamor to get something done there. And I think while there is a wide perception that capex allocation has moderated, frankly, if you look at the numbers, it's not really the case, right? While the government budgeted for 11,000 crores, but they said they will end up spending about 10,20,000 crores. And then for next year, they've budgeted again 11.2 lakh crores. But if you actually look at what the stock markets or earnings or order books will be important, is that we have the data for the first 9 months of this fiscal year. And the government has so far spent about 6.8 lakh crores, which means that the next 3 months, you still have 3.4. And then on top of that, you have 11.2 for next year. So if you take the 15-month period, the government actually will be spending almost 14.6 trillion rupees on capex, which is a run rate of almost 97,000 crores a month versus an average spending of 75,000 crores that they've done in the first 9 months of this year, which means it's not a 10% hike. It's actually, in real terms, it will be a 29% increase, obviously provided they spend that money in the first 3 months and they spend the 11.2 for the next year, right? So I don't think it's that much of a bad news. I think it's just about the fact that people had given up on consumption, and I think this was expected, and finally they delivered, and that's why you're seeing what you're seeing in the markets, where all consumer stocks have been bid up.
No, I completely get your point that, valuation comfort definitely is within the consumption basket. But if you were to tweak your portfolios, or should you be tweaking at all? Because right now, the way people are giving or handing out the verdict on capex is that, capex has peaked out. These stocks will never come back to the hey glory days of 2024.
Well, nothing is forever. As I said, let a couple of weeks and months go, and I think people will get down to basics. Again, even if you look at, for example, what they have done for the electronic component manufacturing ecosystem, right? They have reduced custom duties on a lot of inputs that would go to encourage manufacturing of electronics within the country. So it's not that manufacturing is forgotten. I think it's just about, investors look at where the incremental delta is coming from. I think people were positioned in the investment cycle part of the market, but maybe people were underweight on the consumption side of the market, and therefore you will see these short-term shifts that will happen, or reallocations that will happen within the portfolios. But I think in the longer run, what will matter is earnings growth. That, to my mind, is what will stay in the long run. People will forget the budget in the next couple of days.
But should one right now have a larger allocation to a particular sector? And if that's the case, should it be consumption? Because that's where you have valuation comfort and that delta play.
So I think, yes, there is a case for a greater allocation to discretionary consumption, right? So whether it is autos, whether it is retailing, I think there will be some pickup that we will see going forward. We've already seen that some of the consumer companies have talked about the fact that rural is picking up. And I think, if I'm not mistaken, Dabur did mention that they are also now seeing green shoots in urban consumption as well. Another area which I think will be very interesting from a consumer perspective would be real estate and tourism, right? These are two sectors which should benefit. I think, given the fact that we now have a very tight fiscal deficit of 4.4%, I think that gives RBI the room to probably cut rates. They've already infused some liquidity. It is quite possible that in the next RBI meeting, they will infuse even further liquidity and maybe even look at a rate cut, which means that interest rate sensitive stocks, NBFCs, real estate also should get a reasonable lift from here onwards.
Quite interesting. So, Hiren, if one were to make pools in one's portfolio, one being a tactical allocation, one being a long-term one, what would you classify in these brackets or buckets?
We really don't do any tactical allocations as such, but I think if people are underweight...
Portfolio? Can I call it that? Can I call it momentum portfolio then?
No, I think clearly in the near term, the momentum will be with the consumer stocks. There is no doubt about that, right? But I think longer term investment is all about having a balance in your portfolio. Just a few days ago, when people were not very confident, then people started buying pharma and tech. And now today, everybody's forgotten pharma and tech. So I think, you get these small mini cycles where something gets amplified. My sense is that the long-term structural story of manufacturing in India still continues. I think capex will still continue to be spent in this country, and therefore we have exposure to consumption, we have exposure to capex, we continue to have exposure to pharma, and we continue to have exposure to tech as well. So I think we have a fairly balanced approach. As I said, it's where the incremental shift comes is where the mind share really goes to. And I think that incremental shift clearly is in favor of consumption at this point in time.
Yeah, clearly seems to be the case. But again, you know, Monday is going to be another day. Let's see what happens over the weekend and what news flow we get from the White House. But Hiren, good chatting with you as always, and we'll catch you again soon.
Thank you. Thanks
Thanks.
for having me. Bye-bye.